Good afternoon, everyone. Thank you for joining our webinar, The AI Advantage, Using Agents and LLMs to Win in Banking. My name is Fiaz Sindhu. I'm your host for this webinar. We've heard a lot of interest in this topic, and whether you have AI on your roadmap or not, we're grateful for the opportunity to make some high-profile topics in the banking space a little bit less opaque. If we can advance to the next slide, we can talk a little bit about today's agenda. So we'll start a little bit by talking about some of the consumer and business side use cases in leveraging LLMs and some interesting LLM applications that we've seen in our work. We also have Grasshopper Bank with us today. They'll provide a template for how to apply AI workflows across your financial institutions, plus a case study into a customer who's a super user of their AI functionalities. Of course, we'll also want to talk a little bit about how AI is affecting bank at the staff level. We'll talk about efficiency opportunities in helping scale operations within our financial institutions, but also talk about the potential for growth opportunities leveraging AI-based technologies. And then lastly, we'll close by answering some of the big questions in the compliance space and what some thoughts on what sort of posture your institution should take in the current regulatory environment, followed by some Q&A. So with that, let me introduce our speakers. You already know me. I'm Fiaz. I help lead strategy and operations at Narmi. I'm accompanied by two other leaders from Narmi, Chris Griffin, co-founder of Narmi, and also Randy Rutherford, who is the general counsel of Narmi. And we also have with us Nate Grundeman from Grasshopper Bank, who will be talking a bit about what Grasshopper is doing with AI. Grasshopper is a very innovative financial institution based in New York City. So we're really glad to have Nate and Grasshopper here with us today. So if we could go to the next slide, I'll hand it over to Chris Griffin to give a little bit of an overview of how we look at the AI gradient. Chris?
Great. Thanks so much for that. In terms of AI, there are, of course, been a lot of various uses of that term, and also in terms of agentic AI, a lot of different uses of those terms. So we wanted to just start off to try and get all on the same page in terms of what we mean by these various terminologies. As many of you know, machine learning certainly is not new to the industry. It's been something that has been the bedrock of a lot of automation over the years. Narmi, in our onboarding capabilities, as an example, has been leveraging machine learning since the start, really, of our company nearly 10 years ago. That term has been somewhat replaced by the terminology of AI. And within AI, the vast majority of the content that we'll be discussing about today is really around generative AI, which I'm sure you all are familiar with. Where Narmi thinks there's a really interesting opportunity today for financial institutions is leaning into this Goldilocks zone of agentic workflows. So the first version of interacting with these LLMs, these large language models, was really through primarily Copilot or chat-like integrations. I'm sure we've all used ChatGPT or Claude AI or another tool like Microsoft Copilot. To the other extreme is something like the headline of OpenClaw or some of these other fully autonomous agents that you may have heard about that are hard to explain, hard to control. That's kind of the inverse of their utility. And where there's a really interesting middle is taking the existing workflows that you as a financial institution already have, or the workflows that an end user already takes within digital banking or through other means, and layering on top agentic AI to really help make those better, stronger, and faster workflows. So that is where we'll be focused on some of our content today, and just wanted to start out with that.
So thanks, Chris. So we're going to just dive right into our discussion here. So we're going to start by asking how can AI place us where users are? And I think there's an interesting visual here that I was looking at a few weeks ago. If we think about big paradigm shifts in technology, I think one of the major paradigm shifts in recent years that many of us are aware of is touchscreen smartphones, which emerged, 2007, 2008 timeframe. It took about, I think if I recall correctly, roughly about 5 to 6 years for Android OS phones, for example, to get to a billion users. The chart here shows the path to a billion users on ChatGPT, a billion weekly users on the platform, and you can see that the adoption has been very significant. And I think this is very notable from a financial institution's standpoint, because if you look at the use cases that people are running through the LLMs, people are using LLMs for many different applications, but they are using them for financial use cases, financial analysis use cases. You have consumers leveraging the platform to help them with saving for vacations, planning vacations. You also have some businesses that are starting to lean into leveraging the AI technology for cash management, liquidity management type of use cases, because of the ability to aggregate and integrate different data sets with banking data to develop financial intelligence and new insights for their business. So the applications are pretty broad on the business side, broad on the consumer side. And I think that's part of why we've seen such adoption of this technology and why we see so much potential in this technology. So from Narmi's standpoint, we've done quite a bit of development in this space. It's a big focus area of our company, which is hence the one of the drivers of the webinar, the importance of this technology to the industry. So I'll hand it over to Chris to talk a little bit about some of the product development we've done in this space.
Great. Well, we're particularly excited to have one of our partners on the webinar today, Nate from Grasshopper Bank. And part of that excitement is that we launched, in partnership with them, the first MCP server in the United States for a bank. So what does that acronym mean? Won't get into the technical details. That is less important. But I would think about it in terms of a similar nature to a company like Plaid, or how your users today connect to accounting systems like QuickBooks, right? They look to you as the financial institution to make it easy to connect third-party fintech apps and or accounting systems to their bank account. This is kind of the next wave, the next channel, so to speak. So what an MCP server allows you to do is connect your bank account to your LLM of choice. So we have partnered with Claude AI. We've partnered with ChatGPT to actually allow a consumer or business user to connect their bank account in a permissioned and secure manner to get read-only access to their data. So from a risk and compliance perspective, it's very similar to how you interact with all of the various third-party fintechs by allowing data aggregators to access the data in a permissioned manner. This is just a very quick GIF of some potential use cases here, but kind of the point is that the use cases are endless, right? LLMs can be very hyper-personalized. You may have seen recently that some of these larger labs have actually purchased personal financial management companies. And so they're definitely leaning into the reality that everyone is looking for authentic, unbiased financial advice. And by getting the relevant data into that, you are enabling them to really understand their financial story and be that partner for them. So Nate will definitely speak to this much more in terms of what they've seen with their customer base with this tool. But just wanted to give through the next slide a video example of what this could look like in practice. So this is a real life, prompt. Frequently we'll actually do these live, but just in the interest of time, chose to take the path of a screen recording here. But this is Claude AI, if you're not familiar with it. And what the prompt is saying, in case you can't read it, it's saying, hey, I'm interested in a week-long trip to Venice. And specifically, right now, can you map out an itinerary and a budget? And can I afford this? And really quickly, it's saying, okay, well, you've got a lot of money. You can definitely afford this, and you're probably looking for a luxury trip as a result. So you're going to see things in this itinerary that skew towards the luxury side of a trip to Venice, right? It's also making an assumption that you mean Venice, Italy. Again, probably due to the fact that you're located in New York City and that you are, in this example, a high net worth individual. You're likely to be talking about Venice, Italy versus Venice, California, right? And that's the power of these tools, right? Is they're able to make a lot of reasonable assumptions, access a ton of live information. So in order to get to these estimates, it's actually looking at real flight budget information, and really is ultimately, deriving a very detailed itinerary on your behalf. And then rounding it out with, hey, this is basically going to have zero impact on your liquid net worth. Definitely seems like you're going to be interested in a luxury trip. The Amman, Venice, seems like a great option for you. So that's the power of these tools, right? If you were just delivering personal financial management in your own digital banking application, probably not going to be able to comfortably pull in all of those data sources, as well as provide that hyper personalized device. Now, that is certainly somewhere that Narmi is investigating and furthering along. But from a risk and compliance perspective, this is something that financial institutions like Grasshopper have already deployed and feel comfortable with. Again, today it's read only. We are investigating right cases and how that could look from a risk compliance and authorization perspective. But today it is read only.
Thank you, Chris. That was a great overview of a consumer use case. I wanted to briefly touch on business use cases for leveraging AI as well, and what sort of capabilities banks can help support their business clients with. So something that's definitely been on the radar of financial institution leaders over the last few years in particular is the emergence of non-bank fintechs emerging into the business banking space. The survey that we're highlighting here is showing that this is becoming more and more of a concern for leaders at financial institutions in terms of non-bank players that are coming into the space serving business clients. We see this as a natural market for banks to serve and financial institutions to serve, and we think AI is a major differentiator for banks in this space to help stay competitive with what some of the fintechs are doing in terms of providing financial tooling to their business clients that really at a competitive, at a significant competitive advantage relative to other solutions that those businesses might have access to by leveraging AI-based technology versus, for example, other software packages that the business would have to procure to run their day-to-day business. We think that proposition would resonate very strongly with SMBs and SMEs, exploring use cases in cash forecasting, reconciliation, liquidity management, et cetera. So the types of verticals we think, if we could advance to the next slide, there's the verticals where the natural adoption of this technology has happened have been in really tech-forward businesses, industries that are focused on the tech industry, where you do see early adopters of this type of technology. But we also see the application of this technology to support Main Street businesses, restaurants, dental offices, title companies, attorneys' offices, the natural markets for many community financial institutions in the business space to really provide, help differentiate the proposition of the financial institution to the client and really help that client solve business problems and day-to-day problems. And we think that proposition that a financial institution can be powerful leveraging AI. So without further ado, I will turn it over to Nate from Grasshopper to talk about what they're doing in this space. Nate?
Thanks so much, Fiaz. Hey, everyone. I'm Nate. I'm a director of product at Grasshopper Bank. Before my time at Grasshopper, I was a fintech founder. I raised venture capital for 2 companies. I love working at Grasshopper because I have the opportunity to work on genuinely cool things that improve the lives of the clients that we serve. Grasshopper has been a longtime partner of Narmi's, so we were excited to work together on the first MCP server from a US bank. Today, I'm going to talk about how Grasshopper's established ourselves as a leader and first mover among financial institutions for implementing AI across our internal operations and for our clients. I'll start with this quote from Pete Chapman, Grasshopper's CTO. A common misconception among financial institutions is the belief that they have to jump straight into AI in a grand agentic capacity in order to make an impact on their business. That isn't true. Approaching AI with an all or nothing mindset can stall AI adoption and prevent banks from realizing the practical benefits that even small focused implementations can deliver. Next slide, please. From the month of December 2025, we estimated that AI and robotic process automation saved our 150-person team over 2,000 hours of work. Most of this efficiency is driven directly by the team's usage of the AI tools available to them in Google Workspace apps, including Gemini, which I'll speak more about soon. These efficiencies have enabled us to amplify the impact of many of our team members, enabling us to scale our volumes without scaling headcount as quickly. Next slide, please. Here's a chart of 2025 showing the internal adoption of Google Gemini. In this case, the definition of an active user is that they average at least one interaction per day. Now in April 2026, over 90% of our team is considered an active user. Next slide, please. To get to the place where AI is a powerful tool for our internal teams, as well as for our clients, we took a crawl, walk, run approach. In Q1 2025, we understood that AI gets exponentially more powerful and reliable as it gets access to more context, and this remains true today. The more correct, relevant information you can provide in AI, the better the output, with less hallucinations and slop. So we launched parallel initiatives, one to make AI useful within the bank, and another to meet our clients where they already were and offer them more powerful tools to leverage AI across their finances. For the bank's internal AI roadmap, we needed to start on a foundation we trusted. We chose Google Gemini instead of other model providers because we trusted Google's commitment to information security and because of the integration of Gemini into Google Workspace. Once we selected the platform, we consolidated all of our back office into Google Workspace to benefit from those integrations. Next, we rolled out Google Gemini to all employees. We provided weekly trainings and encouraged departments to share learnings and best practices with each other. Gemini has access to our procedures, our meeting recordings, and documentation that makes it or that keeps it grounded in how we do things versus making dangerous assumptions. Finally, we rolled out Google's supercharged enterprise version of Gemini in Q4, which enables us to create custom integrations and connectors to even non-Google systems, as well as the ability to create internal agents. This is the foundational plumbing that will enable the bank to continue building agentic capabilities now and in the future. Next, I'll switch gears to our business banking clients. You can actually, you can stay on this one. Thank you. I'll switch gears to our business banking clients. Our clients were already using AI in Q1 2025, and Anthropic had recently released Model Context Protocol, or MCP, to make it easy for AIs to access data in other systems. Whether or not it was MCP or another protocol that won, we knew that some version of this would be the future. So we waited a few months for a big bank or fintech to launch an MCP, but no one did. So Narmi and Grasshopper decided that we'd be first to market. We launched in Q3, and it was momentous because it was the first opportunity for someone to let an AI easily help them analyze their finances. Of everything I've been involved in at Grasshopper, this is what I was most proud of being a part of. We can stick on this slide, please, Mary. So this is just the beginning. Our internal implementation of AI and the MCP are about laying the infrastructure for agentic finance. But what is agentic finance? We can think of it as the use of autonomous AI agents that perceive, reason, and complete multi-step financial tasks without continuous human input. Before I dive into this, I think it's important to put a massive asterisk next to everything I'm about to say. There's a lot of hype surrounding AI, and no one who says they know what's going to happen actually knows. That said, let's live in a world for a minute where the AI hype is at least directionally accurate. What does it mean for financial institutions? First, all of a sudden, we're building for a new customer profile. Humans will not be the only users interacting with a bank anymore. Non-human agents will act on behalf of a person or business to do what they can to accomplish tasks for humans, including banking. And more importantly, AI has different preferences than humans. AIs will prefer a new user interface. They won't want to use a spreadsheet or digital banking. They don't even want to use a screen. They want direct access to the structured data and the ability to take action with plain text. And the best methods to do that today are MCP, APIs, and CLIs, but we can expect this to evolve rapidly. Third, AI will quickly move from analysis to taking action. This is because humans are lazy by nature, and as soon as we trust technology, we want it to do the heavy lifting for us. Today, we let clients analyze their balances of transactions via MCP, which is really useful. But as soon as financial institutions let clients automate their finances with AI, our clients will want to do that. And AIs won't get tired. Servicing these AI-powered clients will take every bit of the AI back office efficiency that we're building. The implications of these changes are profound for us because it rewrites the playbook of what it looks like to be a successful bank or credit union in the future. But we're fortunate that Narmi shares in our urgency to help us prepare for a version of this future. Next slide, please. So here's a demo that the Narmi team recorded, like the one before, of a business banking use case for cash flow planning. Here, they prompt Claude with the following: build me a 12-month cash flow calendar based on my historical transaction patterns. Highlight the months where I typically run tight and suggest how much I should set aside now to smooth things out. As this demo plays, I'll point out a few things. The MCP allows clients to pull financial context out of their bank and into their AI of choice. In this case, it's Claude. In this demo, the MCP connector pulls the user's account, balance, and transaction data into the client's instance of Claude. Then Claude gets to work crunching the numbers, generating charts and visualizations for the client. You can tell this is really powerful. It's not something that we can do in online banking today, and it's not something that really any digital bank or even fintech can offer. Next slide, please. All right. Last but not least, I'll share a bit more about one of our current MCP clients, NFI. NFI is an AI native startup founded in 2023, building agentic products for financial institutions. They're a perfect early adopter because they're building for the same future we are, and they're already comfortable with the technology. Next slide, please. Here's a quote from Michelle, NFI's CFO. Grasshopper's AI connector represents a glimpse into the future of financial management. It enables me to pose complex cash flow questions in natural language, dramatically reducing the time I spend on routine financial analysis while improving the quality of our cash flow management decisions. Here are some of the things that Michelle and NFI use the MCP for. First, cash management. She might prompt Claude, do I need to pull from my treasury account to cover Q2 expenses? Second, up-to-the-minute visibility. She might ask, did my customer pay me yet? Or did the wire hit my account? She finds this easier than logging into online banking. Third, bypassing manual extraction. Some businesses are uploading their bank statements to AI to run analysis after the fact. Instead, the MCP allows them to do so in real time on demand. And last is consolidating business context. So businesses that already use AI benefit greatly by adding financial data to that existing context. This lets their AI have a more complete data-backed understanding of their business. And here are some quotes from NFI about the impacts they're seeing from the MCP. Michelle is a team of one. We don't have a controller. We don't have another staff accountant. We're leaning on the MCP. We're seeing a couple hours per week in time savings, but the more important effect is that those hours are being reallocated to higher value work, such as board reporting. The impact is less about better answers and more about faster, more continuous decision-making. That's all I have for today. Thanks so much for letting me share how we're implementing AI at Grasshopper. I hope you learned something practical that you can consider for your company. And I think there will be time for some questions at the end. But for now, I'll pass it back to the Narmi team.
Absolutely. We're looking forward to that. I'm sure the crowd has some. And it's been an amazing journey to work closely with you and the rest of the Grasshopper team to bring that to life, and most importantly, to get some of those stories from the businesses that you're working with directly. It's been really exciting and motivating to see that. So thank you very much. In terms of Narmi's enablement around AI, certainly those AI connectors, right? That MCP, the APIs, the CLIs, that is a really important new channel of baking that we will continue to innovate in. And we're excited to work alongside Grasshopper and our other partner financial institutions to do that. But even before then, another area that we had been deeply exploring was, again, from a risk and compliance and utility perspective, there are so many back office use cases of agentic workflows that can be deployed today safely and soundly. And so that is what the remainder of our time together outside of that Q&A is going to be focused on. So if we go to the next slide, want to just, in terms of the mental model that we've been operating under, most of the financial institutions that we interact with are already quite lean. Community financial institutions have been stretched thin for a long time. And fortunately, staff, have a good understanding of what things look like cross-functionally. They have a better understanding of how one part of the business impacts another, which we think is so. We're excited to help community banks think through their next phase of growth. How do they do that without having to increase a ton of headcount? Because we all know in the current economic environment, that can be a really difficult case study for your leadership team or for your financial officer is proving that new headcount. What we're seeing happen more readily is investing in making these workflows better, stronger, faster, right? How do we help folks, just like Michelle at NFI, focus her time on more higher value tasks? Same thing, right? How do we help folks really focus their energy and time that work at our partner financial institutions on the maximum value that they can provide? And so we've been doing that in a number of different ways. If we bring us to the next slide, we wanted to highlight just an example use case. So we're going to show an example agentic AI use case and how we've iterated over time. The first one that we'll dig into and really lean into here is in the context of account opening. So AI Decision Assist is what we have developed behind the scenes. The first version of it that we did was really helping staff members to better understand the decisions that were getting sent to manual review, understanding all of the outputs and inputs that went into that in terms of why something is flagged for manual review and making it easier for them to make that decision. So to start, Narmi, one of the products that we offer is a deposit account opening solution. Most of our financial institutions do straight through processing for about 70 to 80% of the applications that they see. So 70 to 80% were already fully automated yeses or nos. That remaining 10, 20, 30% is where historically they have spent a lot of time trying to figure out, is this someone we want to approve or not? Or is there additional information that we need to get from them in order to get comfortable with an approval or some other iteration between those margins? What we've done here is, if we bring us to the next slide, is started out with really just helping the reviewer understand the summary of the decision much more quickly. So this is a very quick overview of what that initial version looked like. What we're developing now is actually more of an agentic use case, where it's actually then recommending the action that manual reviewer should take. And then in a not too distant future, as financial institutions get more comfortable with the decisions it's making, actually increase the automation even further. So that is a perfect application of generative AI, right? Is taking really complex data, fulsome data, helping a human to better understand it, then leveraging reasoning to actually come to a decision, and finally make those decisions in real time and fully automate those decisions. So that is a great use case of AI in action. Again, these are things that are happening today. This isn't futuristic. And with that, wanted to turn things back over to, I believe, Fiaz to really, excuse me, Randy, to then kind of dovetail into the compliance part of how does this actually get applied at your financial institution.
Absolutely. Thanks, Chris. Appreciate it. All right, let me set the stage a little bit on the regulatory side. Mary, we can flip to that next slide. Thank you. The baseline, there's no unified federal AI statute, period, for financial services or otherwise, and one isn't coming anytime soon. But agencies aren't waiting for Congress to act, and certainly states are not. The FTC, for example, we'll give some examples, have brought over a dozen enforcement actions against companies that have made overblown AI claims. CFPB previously issued circulars on AI and credit decisions, and those have been withdrawn as of May. But the underlying statutes haven't been, and some of those obligations are still the same. 2 months ago, Treasury released its Financial Services AI Risk Management Framework, which operationalizes the NIST AI framework specifically for our industry. And then just last week, the OCC, the Fed, and the FDIC issued revised interagency model risk management guidance. Now, that guidance explicitly carved out generative AI and agentic AI from its scope. It also has a proportionality principle in there that reduces the burden on institutions that are under 30 billion. But along with that, there was an announcement that there'll be a dedicated AI-focused request for information coming soon. So we're getting information about where the federal regulators are headed. While that happens, obviously states are moving faster than Congress has. Colorado's AI Act takes effect soon. It expressly covers financial and lending services. Texas, Utah, California, among others, New York, have all enacted their own AI requirements in some form or fashion over the last year or so. And while there is an executive order that directs federal preemption, that requires congressional action as well. So for now, the patchwork is the reality that we're working in. Here's the key point to that. And Mary, we can click through a couple of the, right, let's get to that next one if you could. You don't need to have a new AI law to have AI compliance obligations, right? As this audience is well aware, you already have them. So whether it's vendor management, fair lending, the GLBA, they all apply to AI right now. Examiners are evaluating our AI governance today with the frameworks they already have. So the environment's complex, it's evolving, but that doesn't mean we need to stand still. Let's talk a little bit on the next slide about the compliance architecture that's built for where AI is going, the things we've talked about a little bit on this in this webinar today. All right, we'll say from chatty AI to acting AI, the things we've talked about over the course of this hour. There's a meaningful difference between sort of AI that drafts a marketing promotion for your review and an AI that can execute a wire transfer. That's that sort of chart that Chris laid out right at the beginning of our talk. When an AI generates the content for you, it could have inaccurate output, but a human should be catching that. When it's taking action, we've got risk that something's done in your institution's name that's much more difficult to reverse. So that's why Narmi is building the agentic workflows in that Goldilocks zone that Chris, Fiaz, and Nate have talked about so well earlier in our webinar here. So in practice, what's that mean? An architecture that protects the FIs and our end users and satisfies your examiners needs sort of the 4 pillars that we lay out here. The first of those is we'll go back that slide. There we go. Thanks, Mary. The deterministic guardrails. So the agents that we're looking into and talking about here operate within predefined logical constraints. The AI outputs require human approval before the delivery to any end users. The architecture catches what models might miss in there. These are the structural constraints that are embedded into the products that we're talking about today. These things will also include things like bias mitigation, particularly to the extent that the use cases involve credit lending and personalized offerings. So we can support the adverse action notices, those kind of obligations whenever AI is playing a role in credit decisions. The second, human in the loop. And that's where we get a little bit into that Goldilocks zone. We believe in the agentic assistance model, not really the agentic autonomy yet. For high stakes actions, the human's always that final yes. The AI can do the research, pull some data, draft responses, but the team or the end user makes the call. And as we move along in that agentic range, where that human in the loop happens can adjust as well. Is it right away with each action? Is it at the end before a final action is taken? Your risk profile can be reflected in the tools that we ultimately end up offering to end users. Third here, the digital paper trail. This is where we get really into the compliance side of things. Our AI features generate activity logs built for when your examiners show up. Every interaction, the outputs, the human review decisions documented. So when regulators need to understand what the AI did and who approved it, the record's there. And then there's the data question, which is usually the first thing an examiner's asking about. That's that fourth pillar of data sovereignty. Not all data is the same, and we don't treat it that way. Public data that can flow through general LLM processing is one thing. Internal data gets restricted in our models with no leakage. And then obviously PII is in a zero training zone. When it can be accessed, it's done securely, but it's not learned from. So, we're only contracting with LLM providers who have committed contractually to not training on data. So when your examiner is asking about where your customer data goes, you'll have an answer. That's a compliance-first architecture. So we're going to move to the next slide and talk a little bit about how it translates into the working model between Narmi, for example, as a vendor and your institution. Here we talk about sort of a shared responsibility model. You can say, you see on the left side there, if you're afraid of your AI, you're not going to use it. If you don't use it, you're not going to grow. It may be too soon to be true today, but it's certainly directionally kind of where things may be going. So in our view, the institutions that treat compliance as sort of a gatekeeping function can fall behind. The institutions that treat it as a foundation for bold AI adoption may lead. And that's the thesis behind how we're looking at the space. So Narmi's model is built on that kind of partnership. On our side, we're building compliant tools. On your side, the institution maintains oversight and final approval of all AI-generated content before it's ever reaching customers. So that clear line of accountability is what examiners are going to want to see. It protects everyone. It's not just a compliance check the box. It's what creates products that internally and externally our customers are going to want to see. We're also, of course, kind of going beyond just the technology of it. We'll support your compliance posture directly, the appropriate AI policies, audit rights, adverse action notice support, and the documentation that teams need to satisfy the model validation requirements for Narmi tools. And as those things evolve, we evolve right alongside those things. So you've seen today, the institutions that are seeing real results right now, like Grasshopper, are not the ones that sort of threw caution to the wind. They found partners who were thinking about the right compliance architecture. They thought about the right compliance architecture, and that way they could focus on deploying AI where it really creates business value in the ways that are satisfactory from the compliance side as well. It's our belief that the institutions that really move deliberately with the right partner and the right architecture are the ones that are going to win. So that's really the framework there. Like, do we have all the answers today? Obviously, with the state of regulation as it is, that answer is no. But can we create the compliance confidence that's necessary so that you can innovate effectively and meet your obligations as they evolve? 100% yes to that one. On that note, I think we can move it to a Q&A. I think I see some popping up in the chat.
Yeah, we do. Yeah, thank you, Randy, for that overview. So we'll give maybe folks 30 seconds on pop some questions into the chat. We have a few minutes here to address questions that folks may have. I'll just dive into one of them, as it seems like it's a very natural one based on what you just talked about, Randy. So this would be for you, Nate. I think a lot of banks that haven't leaned into this space yet are thinking about leaning into the space or think about what readiness activities they need to think about on their end in terms of getting internal approval. Can you give a little bit of color on what that experience was for you and Grasshopper?
Absolutely. It involved the whole company, and honestly, like it required a lot of input from the entire tech team, our CTO, our CEO, our compliance team. Everyone was involved. Ultimately, we came to the conclusion that our existing back office infrastructure just wasn't going to cut it across by integrating AI into it. So we chose to do the hard work of consolidating everything onto Google Workspace because we knew that we trusted the Gemini model from Google. We trusted Google Workspace from an information security perspective. And so we felt comfortable making that like integrating it all and moving forward with that. I think ultimately it comes down to, are you comfortable as an institution giving a model access to the documentation, the procedures, everything that it needs to have the context to be effective? And for us, the answer was no until we moved everything over to Google.
Thank you, Nate. I have another question here related to the MCP server. This one might be for Chris Griffin. The question is, how does a financial institution go about integrating the MCP server?
Sure. Yeah. So in terms of how the integration works, our implementations team works with your financial institution to stand it up. In terms of doing that, if you are a digital banking customer of Narmi, it's very simple. But really the hard work is around training internally, building out support scripts, making sure that you're marketing it appropriately. Typically, we'd recommend first rolling it out to a select group of business users and then extend that to all of your businesses and then consumers. There's varying degrees of risk and compliance concerns to think of in that regard.
Great. Thank you, Chris. So this is maybe another MCP related one. This is more of an editorial opinion, and maybe it's Chris and Nate giving perspectives on this. So in this webinar, we've talked about both consumer use cases, business use cases. What are your views on where the more applications may be on the consumer side versus business side? Maybe short term, long term. Any perspective you have on that? Maybe we'll start with you, Chris, and then Nate.
Well, I would love to get Nate's perspective. Grasshopper Bank is, historically was primarily business focused, but has a consumer brand as well. For us, I think there are just as many applications on both sides. I would say the one thing that we've been hearing from financial institutions is that there's comfort with starting with that business side first. But in terms of the applications, I think they're immense. I'm a regular subscriber to a gentleman named Alex Johnson. He does a newsletter called FinTech Takes, which I'm sure many of you are familiar with. And he's kind of coined it as PFM 3.0 is where he sees this going. And I think that's very aligned with where Narmi sees that going as well. And in terms of, where that is going is explicitly, starting to bring these experiences into digital banking in a first party perspective. So I'll turn it over to Nate to answer as well. And then it looks like we have another question around, what insights do financial institutions have in terms of the questions that folks are interacting with these LLMs around, and maybe that dovetails into that.
All I'll say, I think, is the sky's the limit for use cases. It's really it is determined by what's possible, and right now it's read only. So there's lots of analysis use cases that both consumers and businesses can use. But eventually, when the industry moves on to what does it take to get to a safe, compliant, right capability, I think, who knows? And it's going to be really exciting for our clients to help us sort of tread that path together.
And so maybe that dovetails into there was a question from Nicholas in the chat around, do financial institutions get insight into the types of conversations customers are having with LLMs, and can those be surfaced in a way that's actually actionable? So today, the MCP protocol, it does not include the raw conversations that folks are having. There's an element of privacy. However, you can see who's having a lot of conversations with LLMs. You can see who's regularly using it, and you can see what information is the LLM requesting, and therefore glean a little bit of intel in terms of the types of questions that they're asking. What is also really interesting is you can help kind of point the answer in a particular direction. So when we first launched the MCP, we did not include an endpoint that listed all of the products that a bank has available, checking accounts, savings accounts, CDs, and the rates and the reason why, et cetera. We do now. And what's really interesting is previously, if you said, hey, I'm interested in growing my savings, what's the best way to do that? It would say, hey, have you considered opening up a CD with Marcus from Goldman Sachs? Or have you considered going with some large fintech or mega bank? Would be the answer 99% of the time. Now, if they have the MCP connected, it totally changes those answers, right? Well, say, well, Grasshopper is offering X, and would you be interested in opening up an account there? So it's interesting where you don't necessarily have exact insight in terms of the questions that they're asking, but you can intuit what they may be interacting with the LMs for, and then start to steer them into really cross-selling them into additional services that you offer. So there is an element of marketing in that. And we saw in one of the consumer use cases, it was very aware that this person was now a high net worth individual. Prior to that, it wouldn't have had that context. So that context is really, really powerful.
Thank you, Chris. One of the things that's definitely, I think, top of mind for some bankers is audit, reviews of model performance, those types of things. And we talked through a few use cases here today. We talked through the MCP use case. We also talked through a decisioning use case as well. And one of the questions that's popped up in the chat is related to maybe best practices on reviews and established cadence basis to assess performance of models. I think this has come up in some past discussions we've had around audit capabilities for banks and what's happening in AI. Chris, any perspective you want to add there?
Absolutely. So having an evaluation framework is really important. That was one of the first things that we invested in when we were building out some of these more agentic workflows in our back office. So that's actually part of even the development process, is iterating until it gets to a good standard of evaluation quality. But what we've been doing and working with some early design partners on this is then kind of looking at their historical data of what are the correlations between various flags or data or outcomes that are being returned in the decisioning flow with the ultimate decision that a human operator has been making, and then using that as a feedback loop to actually inform what the agentic workflow should be leaning towards, and giving them various kind of knobs and dials to turn in order to tune it to what they view fit. So in terms of the exact cadence that a financial institution should set up around evaluating how it's been performing, that is going to be a decision for the financial institution to make. I would imagine somewhere between monthly and quarterly would be viewed quite positively by the regulators. But ultimately, our job is to give you the tools and data to make those evaluations. And of course, put yourselves in a position where those evaluations should be quite strong. But ultimately, the exact internal audit cadence that you want to set is going to be a decision that your financial institution needs to make.
Thank you, Chris. Next question is another editorial opportunity. I think this would be good for Nate and maybe Chris, you to add to it. So from a staff perspective, how do you think AI augmented workflows will factor into how institutions hire in the future in terms of resource profiles?
It's an interesting question. I don't think, as I've said before, I don't think anyone has the answers. I do think that we'll be starting to include token budgets in traditional OpEx versus like an IT budget for a lot of financial institutions and most companies. So we'll be thinking about like how to allocate spend on these LLMs as we would hire a new person. But I also think the skills of using AI are going to become increasingly relevant. And I know I'm probably preaching to the choir here, but I know that at Grasshopper, we're seeing the vast majority of our team using it every day. And as we continue to hire, I know that's important as we're evaluating candidates as well.
Yeah, I can't speak to what that would look like at the financial institution level. Defer to you all to make that assessment. But speaking more for Narmi specifically, you've all seen the headlines where software engineering was one of the use cases that companies like Anthropic has been focused on, really helping enable. And a lot of folks have seen how easy it is to get to a really compelling proof of concept or demo. But there's still a really wide margin between that POC and what actually can be safely deployed in a production environment in a highly regulatory, a highly regulated industry like banking, or one that is, completely built on trust. But what we have been seeing is the skill set is gearing more and more towards being a really great editor versus a really great author. And those are distinct skills. So things like adding in a different type of interview has been something that we've been doing across various roles at Narmi that now help us get a better understanding of, is this person a really great editor? Or were they a really good author, and for whatever reason, they aren't a great editor, and it doesn't appear that they ever will be, right? So there is that dynamic certainly happening, and in many other departments and areas, but I think that's the one that has already kind of come to some conclusions, at least at the Narmi side.
Thank you, Chris. I'm not seeing any more questions in the chat. So I think that would, unless there are any other questions, I think that brings us to the end of our webinar. But I wanted to thank all of our panelists here today for participating. Thank you, Nate, Randy, Chris. I think this was a great set of content, great perspective on use of MCP, and a great agentic back office use case as well. If folks have any questions, feel free to reach out to us. But thank you again for joining.